Imagine the smartest kid in your high school, the one who got a perfect score on every math test without even trying. Now, imagine a whole room full of those kids. But instead of just being good at algebra, these guys were the absolute masters of the universe. They were Nobel Prize winners. They were the architects of the modern financial world. They had a magic formula that they promised could predict the future and turn a pile of cash into a mountain of gold with zero risk. And for a while, it worked. They were making so much money it was disgusting. But then, something happened. Something that their perfect math said was impossible. In a matter of days, these geniuses didn't just lose their money, they nearly accidentally deleted the entire global economy. This is the story of long-term capital management, the company that was too smart for its own good, and the day the math broke the world. To understand how a group of geniuses almost destroyed your bank account, you first have to understand their magic trick. In the world of finance, there's something called arbitrage. That sounds like a big, scary word, but it's actually really simple. Imagine you're at a park. There are two ice cream trucks. One is selling a chocolate cone for $2, and the other is selling the exact same cone for $2.01. Now, to you and me, that 1 penny difference doesn't matter. But to these geniuses, that penny was everything. They realized that eventually those two trucks would have to sell the ice cream for the exact same price. So they would buy thousands of cones from the cheap truck and sell them to the expensive truck, pocketing that tiny 1 cent profit every single time. It was a guaranteed win. It wasn't gambling, it was just math. They called it picking up nickels in front of a steamroller. It was safe, it was boring, and it was making them rich. But here's the first twist. Picking up nickels is great, but it's slow. If you want to buy a private island, you can't just collect 5 cents at a time. You need millions. So the geniuses decided to use what we call borrowed muscles. They went to the biggest banks in the world and said, look at our Nobel Prizes. Our math is perfect. Lend us your money so we can pick up more nickels. And the banks, being greedy and impressed by the fancy degrees, said yes. They didn't just lend them a little bit of money, they lent them everything. For every $1 the geniuses actually owned, they borrowed 30 more. Imagine going to a casino with $100 but convincing the manager to let you bet 30,000. That's what they were doing. As long as the math worked, they were geniuses. But if the math moved just 1 inch in the wrong direction, they wouldn't just lose their $100, they would owe the casino 30,000 they didn't have. For 4 years, the sun never set on their empire. They were the rock stars of Wall Street. Every bank wanted to be their friend. Every billionaire wanted to give them their cash. They were making 40% returns every year. While everyone else was guessing which stocks would go up or down, these guys were just sitting back, watching their computers find those tiny price gaps and sucking up the profit like a giant vacuum cleaner. They were so confident that they started thinking they were invincible. They started betting on everything. Bonds in Europe, stocks in Japan, even the direction of interest rates in Russia. They thought they had solved the game of money. They thought they had removed luck from the equation entirely. But the universe has a funny way of reminding you that luck always has a seat at the table. Here is the second twist. In 1998, something happened that wasn't in the math books. Russia, a massive country with nuclear weapons and a lot of pride, suddenly ran out of money. They looked at the world and said, we aren't paying our debts anymore. Sorry. Now, in the geniuses' computer models, this was a black swan event. Their math said the odds of Russia defaulting were so low that it basically shouldn't happen for another trillion years. But it did. And when Russia stopped paying, everyone in the world got scared. When people get scared, they don't care about price gaps or math formulas. They just want to sell everything they own and hide their cash under the mattress. Suddenly, those two ice cream trucks we talked about earlier, instead of the prices getting closer together, they started flying apart. The nickels the geniuses were trying to pick up turned into giant, heavy weights that were pulling them down into the ocean. Remember those borrowed muscles? This is where they become a nightmare. Because the geniuses had borrowed so much money, even a tiny mistake was fatal. Imagine you're walking a tightrope. If you're just carrying a small bag, a little gust of wind might make you wobble, but you'll probably stay on the rope. But the geniuses weren't just carrying a bag, they were carrying a grand piano on their backs. When the Russia wind hit them, they didn't just wobble, they tipped over. And because they were tied to every major bank on the planet with ropes of debt, they weren't going down alone. If the geniuses fell, they were going to pull the entire tightrope, the poles, and the whole circus audience down with them. In just a few weeks, their mountain of gold turned into a smoking crater. They were losing hundreds of millions of dollars every single day. The banks that had been begging to lend them money were now calling them on the phone, screaming for their cash back. This is what's called a margin call. It's the scariest sound in finance. It's the bank saying, the bet you made is losing and you need to pay us right now or we take everything. But the geniuses didn't have the money. It was gone. It had vanished into the math. The world was watching in horror as the smartest men alive realized they were actually the most broke men alive. But then comes the third twist, the one that still makes people angry. Today, if a regular person loses all their money gambling, they lose their house and that's the end of it. But these guys were different. They had become systemically important. That's a fancy way of saying they had put their hands around the throat of the entire world's financial system. If long-term capital management went bankrupt and disappeared, it would trigger a chain reaction. Every bank that lent them money would suddenly have a multi-billion-dollar hole in their pockets. They would stop lending to businesses, businesses would stop paying employees, your credit card would stop working, the ATM wouldn't give you cash. The geniuses hadn't just built a hedge fund, they had built a doomsday device. The head of the Federal Reserve, the most powerful man in money, looked at the situation and realized he couldn't let them fail. He didn't have a choice. So he did something unprecedented. He called a secret meeting. He didn't call the government or the president. He called the CEOs of the 14 biggest banks in the world, the same banks that were currently losing their shirts because of the geniuses. He brought them into a wood-paneled room in New York and basically told them, nobody leaves this room until you all agree to give these geniuses more money to save them. It was a hostage situation where the hostages had to pay the ransom to save the kidnapper. The irony was thick enough to choke on. These Nobel Prize winners who had spent years bragging about the free market and how math was better than government were now being saved by a government-brokered bailout. The banks chipped in billions of dollars to keep the geniuses' company on life support, just long enough so it wouldn't explode and take the world with it. The geniuses lost their reputation, their company, and most of their personal wealth, but the world survived. The magic formula was tossed in the trash and the Nobel winners went back to teaching at universities pretending the whole thing never happened. But here's the final twist, the one that should keep you up at night. You'd think the world would learn a lesson from this, right? You'd think the banks would say, hey, maybe we shouldn't lend billions of dollars to people who think they can predict the future with math. But they didn't. They saw that when things got really bad, the government would step in and make sure the big players didn't actually die. This created something called moral hazard. It's like telling a kid they can play with matches because if the house starts on fire, the fire department will arrive in 3 seconds to save their toys. 10 years later, in 2008, the exact same thing happened, but on a scale 1,000 times bigger. The banks used the same borrowed muscles, the same perfect math, and made the same impossible mistakes. Except that time, there wasn't a room big enough to hold all the people who needed to be saved. The geniuses of 1998 didn't just break the world for a few weeks, they wrote the playbook for how to break it forever. They proved that if you're smart enough, you can gamble with everyone else's money, and if you lose, the world will pay your bill. The smartest kids in the room didn't learn their lesson, they just learned how to build a bigger bulldozer. So the next time someone tells you they have a guaranteed way to make money or a perfect formula that can't lose, just remember the ice cream trucks and the Russian wind. The world didn't end in 1998, but it was the day we realized that the people in charge of the money weren't just playing a game, they were playing with fire, and we were the ones living in the wooden house.